How long do I need to have a property in service to rent to be able to deduct bonus depreciation from a cost seg study? What do you say?
Yeah, there isn't any time frame. I mean, theoretically, 1 minute would be enough. 1 day would be enough. Reality is that you want it to be reasonable, probably a reasonable amount of time, but there isn't any. It just, you had the intent to put it in service. It was available for rent. That's it.
That's it.
That is it, right?
And by the way, it doesn't have to be rented. It just has
No.
to be available.
Yep.
So the day that I put the for rent sign and it's available and it can be rented that day, it's in service.
Yep.
If it's December, so I'm going to give you guys a scenario, real life scenario. Somebody bought an Airbnb. They put it in service the last 2 weeks of December. They rented it like 3 times. Average use was 4 days. That's not even a rental activity. That is a trader business. So they cost segged the property and all of that bonus depreciation. They were in a year with 100% bonus depreciation. Right now, we're looking at 60. There is legislation that's passed the House to bring it back to 100. It's sitting with the Senate right now, and those guys can't get out of their own way. So if they do anything, it'll be right before the election. But they take that big loss and it offsets all their other income because they materially participated in the Airbnb. And before you lose your mind and say, there's no way, my accountant said this is not a thing, it's absolutely a thing. It is because in the regs, if you rent a house for 7 days or less, average use, it is not an investment activity. It is a trader business. And the only question is it active? Are you participating in it and subject to material participation rules? And are you providing substantial services to make that trigger employment taxes like Social Security? That's the only question. Or is it passive? I'm just a passive business owner, in which case it's passive. It's a trader business that's creating passive losses.
Yep.
Yeah, so that's all it is. And it's in the regs, it's in the tax code. There's tons of case law on it. There's lots of, like the IRS this is not new, but if you put that puppy into service in that last month or two, all you doctors or all you high income people, you should really consider, hey, maybe I should buy an Airbnb at the end of every year, self-manage it so you don't have to worry about material participation. If you manage it yourself, you automatically qualify. And you could take those losses and you offset your W-2 income with it. We've seen how much we know who you're talking about, the surgeon.
Yeah.
Brain surgeon. He bought how much was that house?
Oh,
Right before the end of the year.
yeah. For some reason, I want to say 800.
It was right around 800,000, but the deduction was about 250.
Yeah. Yeah.
So, so how much did he save tax-wise?
I think that was the one we called Eric up at.
Yeah, I think it was. You could do it every year.
Yeah, 37% on 200. That's 74 plus half of that.
Yep.
You're looking north of 100 right there, cash.
Yep. Kind of funny. Somebody says, how do I join a group for 100 a month? It's not 100 a month. It's less than that. But we call it our platinum membership. I just say it's less than 100 because I don't want to say the numbers. Hey guys, if you like this snippet of Tax Tuesday, then I invite you to click the link and actually subscribe to become a Tax Tuesday member. Every other week we do these live, and you too can ask your questions, and myself and my team will answer your questions on the next Tax Tuesday.